Hello, I'm Jessica Amir for the Finance News Network. Joining me from Auswide Bank is CEO Martin Barrett. Martin, welcome back.
Thank you. Good to be here.
Auswide Bank is a Queensland-based regional lender now servicing customers Australia-wide. Can you briefly introduce Auswide?
We're a company, a bank that's been in operation for some 50-odd years. Ex-building society that has its roots in regional Queensland in Bundaberg, but today we service customers right the way across Queensland and Australia. 24 branches up the coast of Queensland, digital capability, $3 billion worth of assets, and a strong, loyal and growing customer base. We like to think of ourselves as being a small player against the big guys, but the advantages in that are that we tend to be more nimble. We think of ourselves as being innovative, and we're highly focused on achieving growth for the organisation.
Now to your first half 2017 results. What were some of the highlights, Martin? We
had a solid performance, I think, with net interest revenue and net profit after tax up by 6.64% and 20.73% respectively. Cash earnings were up by just over 7%. NIM was slightly down, but overall probably outperformed the sector.
So, Martin, what drove that result?
We had a strong period of loan growth in the financial year 16, which clearly flowed through into the first half of 2017. Strong margin management, very little slip in terms of that particular margin. We've had a good growing consumer loan book, personal loans, both through our own acquisition of new customers plus the strategic relationship with Moneyplace. And we've had a very strong capital position, which we've enjoyed for some years.
And what was the dividend?
So the dividend was 14 cents, which was in line with the comparative period last year.
Auswide Bank has recently increased its equity stake in P2P lender Moneyplace. What's your stake now, and how has Moneyplace been performing?
We've now got a 63.3% stake in one of Australia's main peer-to-peer lenders, and that's seen our consumer loan book or investment increase by about 9 million, from 0 to 9 million in about 8 months in the first period of operation, really, for this fintech. So we're expecting this to continue to increase.
And are there lessons from their model you are applying to Auswide?
We really took a good hard look at Moneyplace and how they'd attacked their approach to the marketplace. And one of the lessons for us is that we don't need to build everything ourselves. So we think partnering is the right model, and it represents a cost-efficient and far more time-efficient approach for us to be able to tap into what is a strategically important market for us, which is consumer finance.
And to a more general question now, Martin, how would you describe the current trading conditions?
Yeah, I think they're amongst the most competitive I've seen in my 30-odd years in banking. So, a significant amount of competition in the housing loan space and in the business banking space. We've seen markets that are mostly growing in terms of home lending in Melbourne and Sydney. So there's a fairly significant imbalance across Australia at the moment in terms of the heat that sits in the housing market. And regulation is certainly more significant today than it has been for quite some time, and that requires quite a higher level of management and prudence in terms of the way that you go about your risk today. Nonetheless, we continue to see good opportunities in the marketplace.
Last question, Martin. What's your guidance for the second half 2017 result?
We do see the second half showing some further improvement for us. Our home lending volumes, as we predicted, have increased as we've now moved away from the integration issues associated with putting a whole new lending system in. We're getting some benefits from that. We're seeing a further step up in terms of the consumer loan piece, which flows both from Moneyplace but also from our own endeavours. So, our expectation is that we're going to see that net profit after tax number improve in the second half. We expect that our dividend will continue to show some increase over the second half as well.
Martin Barrett, thanks so much for your time.
Thank you very much.